We are heading towards meeting our forecast. We believe we will hit those forecasts. It's positive. I think that from the autumn budget, there is a steady recovery, and we're optimistic as we look into the next year. So yeah, I mean, the second half is looking very good.
Hello, you're watching Proactive. I'm joined by Mercia Asset Management CEO, Dr. Mark Payton. Mark, very good to speak with you this morning. You're out with your first half results, and it looks like a positive continuation of last year. Higher funds under management driving revenue and EBITDA growth. And Mark, this really has been a continuous journey for the past 10 years.
Yeah, no, absolutely. And these interim results really are a milestone to sort of stop and reflect on what has been a 10-year journey as a listed business. And we put in, many of the sort of accomplishments that we've done in that regard. And I think it's also worth reflecting that over those 10 years, we've invested something like £1 billion across the UK, of which approximately 90% of that is outside of London. We've invested into 800 businesses. And I think also we've returned over 800 million back to our fund investors predominantly. And I think that's really important because when you start on this journey to say there's great value across the UK, this domestic economy has much to offer, it is then nice to point at the fact that it's returning capital back. It's creating the next entrepreneur that's going to build the next business. And we feel really privileged to be part of that ecosystem now across our 11 offices now with circa 140 of us doing this.
Mark, where do you continue to see value in UK investments?
Yeah, and you sort of step back and say, okay, well, what is Mercia doing? And we break it down into strategic assets and through this 3-year strategic plan, moving into real assets as well. And with strategic assets, we've got private equity, we have debt, and we have venture. So 3 very broad disciplines, but all playing to regional strengths. And at the heart of all of this is being within the community. So that physical presence is really important, but then making sure, and one of our, we have a string of core values that we operate within Mercia. One of them is connectivity, connected, ensuring that you have systems, you have frameworks in place. So information is connected across the group and shared across the group, across teams is critical actually to help us scale. And many, I would say, asset managers, especially focused within the strategic assets, have struggled to scale their business model. And we're scaling this extremely well. And we have 2 platforms that we've put a lot of attention into. One of them is deal origination, and one of them is sales and distribution. And what I mean there is making sure we see the best deals and making sure we can raise adequate capital to match with those deals. And that remains a focus as the group as we continue to grow.
But let's touch on the period under review then, Mark, because as mentioned, revenue is up strongly, £17.9 million, your EBITDA up 34%, and that underpinned a 6% increase in your interim dividends. So take us through some more of the financial highlights.
Yeah, so these financial highlights are driven. We made the strategic decision this financial year, so 6 months ago, which was to emphasize the development of our third-party funds. And when we started back 10 years ago, we had £23 million in third-party funds, which for me at the time felt like an enormous amount of money. We're at 1.6 billion today, and we can see that growing. And we can see how we can grow what is 1.8 billion in assets because we've got direct investments, cash, as well as third-party funds to 3 billion going forwards. So what's driving this growth is our ability, back to that sales and distribution platform, our ability to grow additional funds under management. And we do that through 3 discrete pots. And diversification is really important to us in terms of asset class, as well as in terms of investor type. So we have retail investors, so EIS and VCT is really important to us as we look to deploy that capital. We have what we'd call public sector, so British Business Bank. We manage a number of the regional funds in that regard. And then we have institutional capital, so local government pension schemes, etc. And that latter point, when you look at initiatives like the Mansion House Compact, etc., is going to be increasingly important. And we would describe ourselves as a place-based impact investor. So in other words, we're not based in London with the aspiration of going up every other month to Manchester. We're based in Manchester. So we're based physically in those places that we're trying to deploy capital. And the institutional investors are looking more and more on a domestic basis, but also more and more on a regional basis. So we think that we're very well placed to continue this momentum and growth journey.
And take us through some of the fund management movements over the period, Mark.
Yeah. So So the growth in the revenue in this period, of course, is because of the exceptional performance in securing a number of those regional mandates I just talked about, the British Business Bank. We have basically organic inflows, so we refer to funds inflows because our funds are either evergreen or or sort of 10-year funds. That means we don't get redemptions. So you often hear a lot of talk about asset managers and redemptions and recalls of capital. The only time the money goes out of our funds is returns to investors on positive exits. So we don't have those redemptions. So in this 6-month period, we've seen something like 57 million of organic inflows. And if you look at our capital under management in total, approximately half of that has come through organic growth and half of it through acquisitions. So this is solely organic growth, and we would expect that organic growth to continue. And in this first 6-month period, that organic growth was through VCT, EIS, and a small top-up to one of the regional funds. We would expect that sort of growth rate to continue going forwards. And as I said, it has always been through organic and acquisitive means, and that I don't see changing going forwards.
Mark, you also comment in the results that the tax changes in the autumn budget won't hamper your growth ambitions going forward.
Yeah, and I think what's quite interesting, we talked about retail and EIS and VCT. The EIS market in general slowed in anticipation of the autumn budget. So we've got EIS and VCT, and there was a lack of clarity on the permanency of those products. At the autumn budget, they were clarified as now being extended to 2035. So we envisaged that money to be further coming into that market. So that was good, actually. I think there was nervousness that EIS and VCT would be changed. I think there was nervousness that the capital gains tax would go up markedly more than it has, and that has not, from our conversations with entrepreneurs, impacted in their desire to grow their own businesses. And traditionally, the businesses that we back are typically not in leisure or hospitality or the sort of traditional retail. So those sectors, which have been, I think, hurt quite badly by this budget looking forwards, are not sectors that we have invested in historically. So in broad terms, we think we're well placed, and we think there are a number of tailwinds. And I talked about the institutional capital starting to point more and more to domestic asset managers. I think the tailwinds well outstrip any of the potential negatives that the autumn budget could have delivered.
Mark, how's the second half looking so far?
Yeah, the second half continues to look good. I mean, we have advised that we are heading towards meeting our forecasts. We believe we will hit those forecasts. It's positive. I think that from the autumn budget, there is a steady recovery, and we're optimistic as we look into the next year. So yeah, I mean, the second half is looking very good in respect of, and I talked about deal origination and sales distribution. In terms of deal origination, the quality of opportunities to invest in has markedly improved. So I would imagine that to continue into the second half.
Well, Mark, look forward to discussing again in another 6 months. Thank you very much for taking the time today.
Thank you. Thank you very much.
That's Mercia Asset Management CEO, Dr. Mark Payton.